Hello and welcome to another episode of Niche to Necessity. Today we have Chandan Lodha, who is a co-founder over at CoinTracker. We're really excited to have him on the call today because there's some new features that they're rolling out and also lots of stuff coming into year end related to Rev Procedure 2024-28, things like that that are requiring changes for how you report your basis and track from an inventory methodology. So there's a lot of cool stuff I think we can unpack here with Chandan. So thank you so much for joining us and welcome to the show.
Thank you so much, Taylor. I'm excited to be here.
So could you just start by sharing a little bit about your background and what led you to co-found CoinTracker?
Yeah, sure, absolutely. So my background is mostly in the technology space. Before CoinTracker, I was a product manager at Google for a couple of years, and I worked on a couple different things there: Google Search, Android. Actually, also a project at Google X about providing internet access to rural areas of developing countries. Internet access via like a stratospheric balloon network. So we were talking earlier about Spanish. Like I spent a lot of time in Peru, for example, kind of setting up, cell service in the Amazon and stuff like that. But anyways, I ended up getting more interested in fintech. And I worked on actually one of the first integrations between Coinbase and Google in 2014. And so it was just like a small feature, but because of that, I ended up getting a Coinbase account and getting some Bitcoin and stuff like that. So that was kind of my first foray into crypto. And then a few years later, me and my co-founder, John, who was also a fellow Googler of mine, basically decided to take a leap out of Google and to work on a personal pain point that we ourselves had, which was how the heck are we going to keep track of all of our crypto transactions? Which is something that I see you smiling. I think any self-respecting crypto person has gone through the hassle of creating a spreadsheet and trying to keep track of all their activity, and it's just a mess. So in 2017, we took the leap and we started building CoinTracker to initially just solve that problem for ourselves.
Very cool. Yeah, I mean, I laugh because up until 2021 reporting year, I was in Excel, and it can be brutal. Especially the long. I feel like the problem gets worse the longer that you're doing it that
Yeah.
way. And so I ripped the Band-Aid off the last couple of years, and I've finally gotten my stuff into the software, and it's like it feels good. It feels like a weight is lifted, but I feel like there's still aspects of that that help me really understand deeply on-chain data and things like that. So while I wouldn't wish that on my worst enemy, I kind of am glad that I went through the fire a little bit. So yeah, I definitely can relate to that.
Totally.
So looking back at CoinTracker's early days, how has the platform evolved to meet the changing needs of crypto users? You say this, you built this out as a pain point for yourselves, but how has the industry shifted and how have those kind of needs of users changed and you guys responding to them?
I mean, it's just totally different now. And it kind of follows the evolving needs of crypto users and generally the evolving crypto space. So, like if you rewind back to 2017, 7, 8 years ago, it was just so much more nascent at the time. And crypto still feels nascent, but at the time, I mean, people were basically buying and selling Bitcoin on Coinbase. That was kind of like the core use case. And maybe they had added like Litecoin and Ether, but like it was really like one, two, three tokens that you could basically on Coinbase. And if you wanted anything more exotic than that, you'd have to go to some like altcoin exchanges, but there weren't even that many of them. Binance had barely, I don't think Binance had even launched until like that later that summer in 2017. So it was just very basic activity and very early. And so the very first version of CoinTracker, it basically was just built around Coinbase's APIs and buying and selling basically Bitcoin. But then things, have really evolved since then. We had ICOs, we had DeFi Summer, we had NFTs explode, we had like all these layer twos that have come out. We have bridging and wrapping and all kinds of way more complex activity now. And so with each of these phases, with each of these bull runs, with institutional adoption now and custodians, there's just total revamps of the entire set of user needs and activity that have happened there. So we've just completely had to rebuild CoinTracker from the ground up to support, now over 2.5 million users and way more complex activity.
Yeah, that's really cool. I mean, I remember getting involved, heavily in DeFi and DeFi Summer and, the Unity airdrop and all that stuff. And things just got so complicated. And that's kind of what necessitated my shift from the Excel spreadsheet because, I was involved in some launch pads and things like that. And so you're getting tons of ERC20 tokens, and then not only that, you're looking at Polygon and BSC, and it's like finding places where you can easily report that stuff, but also report when you have more complex things that may not be right in the kind of like siloable, if that's a word, clearly defined scope of what we're looking at. It gets really challenging. So that's I think it's a necessity to be able to be agile as a company in this space, especially when you're dealing with data and you're dealing with highly adoptive industries like this. So what would you say some of the key milestones that helped shape what the product is that we see today?
So I'll give you a couple high level ones. I mean, the first was just initially launching, and we went through a startup accelerator here in the Bay Area called Y Combinator. And that was really helpful because at the time in 2017, I had precisely 0 friends that had crypto. None of my, or at least none of my close friends had any crypto. So I wasn't really connected to the ecosystem or the community. And going through Y Combinator, I went from having 0 close contacts that had crypto to like I was founded by 100 other founders. All of them had crypto portfolios. And within our batch, there were a bunch of other amazing crypto founders too, including Devin and Alex, who started OpenSea, the NFT marketplace. And what was really helpful at that time was we were actually just doing portfolio tracking in the beginning, and we had nothing to do with tax. And these guys were like, "Hey, like if you do my crypto taxes, like I'll pay you money for that. Like you already have all my transactions, you're already doing all the portfolio tracking, but what I really need to do is get my taxes done." And this was 2017 bull run, right? This was one of the major bull runs. Bitcoin crossed 10K. People were losing their mind. It was crazy. But we didn't know anything about taxes. And so we were kind of like, I don't know. And then the next crypto founder was like, I'll pay you $500 if you do my crypto taxes. And I'm like, all right, now I'm listening.
Yeah.
And then Richard Ma, the CEO of QuantStamp, who was also in our YC batch, was like, I'll pay you $1,500 if you make sure I don't get audited by the IRS. And so we're like, all right, we're definitely going to do this now. So we spent a weekend and basically just launched a MVP, super simple version of crypto taxes, and it just immediately took off. So that was kind of the first milestone of getting into YC and launching the actual crypto tax calculator type service. And then after that, we had another major milestone when things blew up in 2021 because everything went gangbusters again. The market blew up, things went 5x in terms of price. Our user base grew 14x year over year. ICOs were going crazy, NFTs were going crazy, DeFi was going crazy. So there was a major rehaul in just saying, okay, we don't just need to understand buying and selling crypto activity now. We need to understand these more complex DeFi operations, the type that you were describing that caused you to kind of graduate from a spreadsheet into a tool. Because now you're matching cost basis and doing transfer matching and keeping track of wrapping and unwrapping and staking. It just becomes totally impossible to do by hand. So that required a major level up in the way we handled things. And then I would say again, like in the past year or so, we've had another major overhaul of the platform again now because we started working on supporting enterprise clients and building a crypto subledger. And we have our hands in some other initiatives too. I think we can talk more about that. But it's been a sort of another step function change in improving the quality, the rigor, the breadth and depth of integrations that makes CoinTracker kind of tick.
Yeah, I think that it must have been chaos in DeFi summer when Uni V2 launched, and then you could just like instantly have like pretty deep liquidity for any kind of obscure project, or even create your own project and then instantly fund a pool. And as long as you spin up a community and you have people that want to trade that asset, you can, it was just like gangbusters. And so you had the ICO boom of 2017, but there wasn't the same kind of ease of access to all those tokens. And so that must have been a bit chaotic. Do you have any, anecdotal stories from that time that were interesting?
Totally. I mean, it was crazy. It was absolutely bananas. Like we, in retrospect, it's kind of fun to look back wistfully and nostalgically and be like, yeah, we survived. But it was like definitely really crazy. Like even before that. So in 2020, when COVID hit, our revenue decreased 70% in 1 month. And it was really tough. Like we were 6 months from going out of business entirely and having to lay off the entire team. It was really grim times. We were 2 years into a tough crypto winter. So they were like big financial challenges like that. And then in DeFi summer, like you're talking about, I mean, we went from basically tracking buying and selling Bitcoin to now there are like 1 million different like liquidity pools you can create, and there's multi-in multi-out transactions, and there's all these new tokens that don't exist anywhere or aren't listed anywhere. And it's like, how do we even get pricing feeds for this? And all of the customers that have been relying on us year after year are suddenly like, nothing is accurate, nothing's working, like all the numbers are totally wrong. We were flooded with hundreds of thousands of support tickets. I was like trying to manually do it all myself. All our Reddit channels were flooded with people saying everything's broken, this totally sucks. Like it was really crazy.
Hmm.
So yeah, again, like we dug ourselves out of that hole eventually, and that came by really focusing on really understanding the user problems, really rebuilding the solution to actually solve them, kind of getting humbled really deeply that like just because we built something good for 2017 doesn't mean it's going to be good in 2021.
Hmm.
But yeah, it was a lot. It was just like a lot of hard work and like having to really rebuild things from the ground up to support the evolving needs of people in the crypto space.
Yeah, I mean, it must be. I mean, it's part of the reason why we're here. It's a double-edged sword, right? The industry moves so fast that it makes it interesting for people like me who, I became a CPA more to kind of like be able to insert myself in any type of industry that I found interesting, not because I loved debits and credits and things like that. So for me, I always my plan was always like, okay, I'll learn the accounting side of things so I can really have a great understanding of businesses in general and like what a healthy business looks like from the financial statements, and then be able to leverage that in whatever kind of industry I want to go into. So I started at companies like Burton Snowboards and place like that, but then really quickly found that I wanted that to be in kind of pioneering industries. So cannabis and then crypto were the two industries that really filled that kind of knowledge void for me where I wanted to be. But it's a double-edged sword because then you have the pace of innovation so fast that you have to constantly be on top of the news, and you have to be involved in communities so that you can hear what's coming down the pipeline and also get other people's take. Because to be able to say that you know everything about this industry, I always say you're either ignorant or you're lying.
Yeah, totally.
And so I think that it's really important to have that passion, but it can be exhausting at times, to your point, especially in periods of highly innovative times. So yeah, it's interesting stuff. One thing I've noticed is that a lot of different crypto tax platforms have kind of like a unique user base or like a specific type of client that they kind of target, because obviously there's a bunch of different platforms that do this. What would you say is like your special sauce or the thing that sets CoinTracker apart that attracts a specific type of user base?
Mm-hmm. Yeah, that's a good question. So yeah, I mean, there's a handful of different products now that do things in the crypto tax space. So let me just briefly talk about CoinTracker's user base. So we have quite a wide breadth of users, and with 2.5 million users, like you just have to have a wide breadth. So there's some people who are brand new to the crypto space, have made 5 Bitcoin transactions, and are like totally new and are just barely coming out of no coinerdom. And then there's some really advanced algorithmic hedge fund traders and enterprise customers and stuff like that that are doing some super advanced stuff. So we definitely do see the full gambit. But if I had to pick kind of like where I think CoinTracker most shines and is most uniquely great, I would say it is at the cases where people are doing more complicated, advanced things. And that's because the barrier to entry to doing kind of like the basic crypto tax stuff is actually not that high. So like
Mm-hmm.
if you're a user and you just come in, you just use one exchange like Robinhood or Coinbase, and you're just mostly buying and holding, the tax calculations are actually not that hard. And so you can kind of do that. You can do that yourself, or you can use a kind of budget solution, and it's pretty basic. Then, again, there's no like really complicated engineering or anything that goes into that. And so while I think CoinTracker serves that user segment really well, there are plenty of other solutions that I think can also do that just totally fine, and they might be cheaper to use than CoinTracker. I think where CoinTracker shines is on these more advanced use cases. So, for example, we spent 7 years investing in automatically parsing 50,000 smart contracts. And we've handled all of these really complicated cases. Like, we've become the official crypto tax partner for Coinbase and Solana Foundation and MetaMask and Uniswap and OpenSea and Phantom Wallet and TurboTax and H&R Block. And so like we've just seen all of these really complicated cases, and that can be complicated on the dimension of DeFi. It can be complicated on the dimension of scale, hundreds of thousands or millions of transactions. It can be complicated in the sense that people are using 100 or 1,000 different wallets, and there's lots of transfer matching issues. So the complexity comes in lots of different shapes and forms, but those are the cases I'm kind of like the most proud of, because it's really hard to do that at scale reliably and accurately. And those are the things I really take a lot of pride in with CoinTracker, is that it's very reliable and accurate, especially in these more complicated scenarios where we've seen a lot of customers like have problems in other places.
Very interesting. Yeah, I think you know, this stuff can be incredibly complex, especially, managing taxes. And people have a lot of pause going into crypto taxes because it can feel daunting. And also, it can feel like it's really expensive to go out and hire a crypto tax professional because
Totally.
we're in short supply. And depending on how complex your data is, it can take real, I've spent 80 hours on certain clients that just really
Totally.
have a deep, transaction book that is tens of thousands, and it's not just spam transactions. It's very complex. Maybe they're doing algorithmic trading or things like that, or bridging. But how would you say you guys handle that complexity and simplify the tax reporting and reconciliation process for your users?
It's exactly that, right? Like you basically talk to a lot of people who are in these scenarios, and you see a lot of cases, and then you just obsess over those cases. There's no way that like a human being is going to go through 100,000 transactions and manually tag them or manually figure out the cost basis for them. It's just completely infeasible. And so the kind of nice thing about having these really complex cases is it really forces us to think about deep scalable solutions that we can then apply to the entire user base of millions of users. So for example, in the very early days, we might have done something naive, like people kind of come in, they have to tag things one at a time or match things up one at a time or review things one at a time or whatever. But when you are trying to deal with someone or a set of customers that have hundreds and thousands of transactions, you basically have to say like, okay, well, that we could just throw that out of the room. That's just never going to work. We're going to have to build a classification system that auto classifies 99.9% of transactions. We're going to have to figure out what every single one of these smart contracts does and put in all of the engineering piping behind the scenes that's complex, so that the front end user experience is ultra simple and people aren't having to spend time and effort doing those kinds of things. So a lot of what we do at CoinTracker is obsessing over these user accounts, especially these more complicated ones, or these ultra users or these whale users, to make sure that we are putting in the piping, the integrations, the cost basis, the DeFi classification systems behind the scenes, so that the front end user experience is, hey, almost everything is auto classified, auto tagged, auto transfer matched, auto detected, auto calculated. The reports are easily compiled, so that even if you're totally not finance savvy, accounting savvy, you can still understand what's going on. And then only the few cases where it's really, really an edge case and it's totally unclear what's happening, or some human input is really actually required, you could say, hey, look, spend 10 minutes reviewing these 5 transactions and just classify what was going on there, because we're not able to auto detect that from on-chain activity. And the impact is that instead of spending 80 hours, trying to figure out your taxes at the end of the year, like what the hell was I doing on, Binance Smart Chain on April 20th, 2023, you can
Yeah.
just say, here are the 5 things I need to do. Okay, there's checks and balances, everything looks good. If I want, I can have my CPA come in and verify things, but it's now it's a 10-minute process instead of this really anxiety inducing system.
Yeah, I mean, there's only a certain amount that the software itself can do. Like, ultimately, you need to be able to make sure that you have all your wallets attached, for example. And like,
Totally.
so I'm sure that there's a lot of challenges that people maybe complain to you guys about. That's really the user's fault too, because if you put garbage into any system, you're going to get garbage out. So I think that's one of the biggest challenge. Those 80-hour clients. It's usually because they tell me they gave me everything, and then I
Yeah.
mathematically prove that they didn't give me everything.
Yeah.
And it's like, your Bitcoin can't go negative, dude.
Totally.
So, it's I think that's a big challenge in this space as well, is, I tell both people on the, the tax prep side and also on the investor side, you have to document everything really well and keep clear records of where all these wallets are and the basis in these, which is what, platforms like yours help people track. Because if you don't, you're going to get things wrong. And I did out an example for a course we released recently where, just simply not properly tracking your cost basis could cost you upwards of 65x in taxes what you normally, it could be infinite, not infinite, but it could be astronomical what you could pay more in taxes, because if you don't properly document things, you're going to have to assume a zero cost basis. And if you have a zero cost basis versus, when you really should have had only a, $500 gain on a sale of a full Bitcoin, it can get spiral out of control really quickly. So, to be fair to companies like yours, the user has to do a lot of work on their end to make sure that they're just keeping track of where all the money goes and the different wallets they've used and the different chains they've used. Because if you don't have the complete data set, you're not going to get good answers from any platform.
Yeah, I think that's everything you said is totally spot on. I completely agree. And I think this is why it's important that there are crypto savvy accountants like yourself and communities like crypto CFOs where there are people who know what they're doing here, because a lot of accountants aren't familiar with the ins and outs of this and won't be able to keep up. So as our head of tax strategy always says, the best thing you can do in crypto is get a crypto savvy CPA to like help you out. One thing I will say though is that having tried to do my own taxes in other areas outside of crypto, I also have a lot of empathy for like how easy it is to forget about this one random thing you did in one random place a year ago. And so I think in the early days, I was really like, oh man, these users, like, why can't they just keep track of everything? Like, why is this such a nightmare? Keep telling them like add all their wallets. But I've kind of come to realize it's just human nature. Like people are just not going to remember everything. And so we kind of take it on our own shoulders to also try to build the software in a way where putting it like taking as much of the load and responsibility off the users as possible, making them have as much peace of mind as possible. So for example, if we detect that they're going to have a negative balance in a wallet, or that there's a mathematical reason why there's a wallet missing or an exchange missing, what can we do to auto detect that and prompt the user like, hey, don't forget to add this wallet. You had 5 transfers coming from the same wallet into your exchange that's synced here. Is this your wallet? Do you want to add it? Can we make that easy one-click addition for you? Things like that, just to make it one less thing for people to worry about. Because yeah, it's so easy to forget.
Yeah, that's great, because I mean, I know that's one of the major steps that a lot of CPA firms will do when they're reviewing your data. Because I know that like lots of firms that are in the crypto tax space specifically are adding other tools into their tech stack as well, so that they can more easily assist themselves in the reconciliations process, like you're talking about, and make those suggestions to the client. So it's not like, you can obviously you don't want to tell someone this is their wallet, but it's like as easy as you can make it for someone to recognize that it's their wallet, the better. And that's great. I didn't realize that was another one of the features that you guys had. So being able to kind of like, I don't know whether it's machine learning or whatever, but to be able to come up with a good idea that yes, this is a high likelihood this is potentially your wallet, and then if the user says it's not, and you move on.
Totally.
Yeah. So speaking about the complexity of all the changes that happen and the fact that documentation is so important, we had a major kind of change in the revenue procedures this year from the IRS and the Internal Revenue Code, specifically 2024-28, which established a safe harbor for the switch from universal wallet, basis wallet reporting to wallet by wallet, which is going to be required as of 1/1/2025. And we talked a lot about having to adapt to industry changes, and this is obviously a compliance change. How has CoinTracker adapted to this rule change, and what are kind of the features that you guys are rolling out to help users comply with this safe harbor deadline?
Okay, this is a great and very technical question, but I'm glad we're talking about it. So I'm just going to kind of assume that maybe not everyone is ultimately totally familiar with this. So basically the background is that there has never historically been a tax form for crypto assets. And now, as the more savvy people here will know, there's going to be a 1099 digital asset form. First time ever in US history, a crypto specific 1099 tax form where brokerages are going to be responsible for reporting all the crypto sort of dispositions that a user's had. So Coinbase and Robinhood, and all these platforms are going to be telling the IRS, hey, here are all the transactions that Taylor made that had capital gains. And as a result, users are going to need to make sure that their cost basis matches what these exchanges are reporting to the IRS. And there are sort of two different ways historically people were doing that. What I like to call kind of like universal cost basis tracking and then per wallet tracking. Universal means it doesn't matter what wallet I have, doesn't matter what exchange I have. If I have a Bitcoin in my self-custody, in my cold wallet, in my Coinbase, in my Kraken, it's all one big queue of Bitcoin. And in per wallet, I have a separate queue of cost basis for my Bitcoin in my cold wallet versus in my Coinbase versus in my Kraken versus my Binance. And so before, people were kind of just willy-nilly picking one or the other, maybe not even knowing that. But now the IRS is saying you have to use per wallet, and that is so that it has to match what the exchanges are each reporting. You can't just have one universal queue. You need to have a queue per wallet or per exchange. And there's a safe harbor, until January to basically make that transition. So without any guidance, this is going to be really messy for people. And I think there's actually a lot of platforms out there that are not even complying with this, which is going to be a big problem for people. But this is a really key safe harbor for people. And so we really want users to take advantage of it. So we've written a blog post that lays out all the details, but the summary of the blog post is that we're creating a guided experience for every CoinTracker user to take advantage of the safe harbor and migrate from the old way of doing things, the universal, into the new way of doing things, which is the per wallet. And there's a couple different ways that people can take advantage of that safe harbor by using CoinTracker. One way is to move all of their assets by token into one wallet. And so if back into my example, if you take all your Bitcoin and you put them all into your cold wallet, then you're automatically kind of collapsing the universal into per wallet, and then you can spread it out again. And that will sort of necessitate that you're naturally migrated into a per wallet transition, take advantage of the safe harbor, and you're going to be good to go for the IRS. That might work for some simple users, but for some more complex users who don't want to move all those coins around or it's just not feasible, we're offering a second option, which is basically the ability to allocate your cost basis from the kind of universal allocation into an automated global allocation for each wallet. And you can basically say, I want to follow a system like FIFO, first in, first out, last in, first out, highest in, first out, and apply that universal queue to my specific wallet. So we have a guided kind of experience in the product to enable people to do that as well, and also generate a snapshot report that basically kind of creates a point in time record of like, here's what my sort of queue was before, and here's what it is afterwards, so that in the event that you ever have to deal with an IRS notice or audit or whatever, you can kind of prove, hey, these were the queues I had, here were the cost bases for every tax lot I had, here's the process I used for switching it over, and I'm fully compliant. So we'll sort of TLDR, we're creating a guided experience to make sure people can take advantage of the safe harbor the IRS is offering and have a smooth experience staying compliant with the new revenue procedure.
That's really refreshing to hear, because it's challenging to get these answers out of a lot of platforms, and to hear about this and the process that sounds very robust and like it'll help a lot of users get into compliance. Really key, because I think that especially tax professionals that are looking to, not all of them will have just a one tax software that they'll use for all their clients, because there will be certain situations where they'll have to use other ones. But I think that it's very important for tax professionals to see that the platform they're using is proactive about these new standards that come out and the new requirements from a compliance perspective, because it shows that, hey, in the future, it's CoinTracker was on it for Rev Proc 2024-28. We think they're going to be on it for the the newer stuff that comes out as well. So that can bring a lot of peace of mind to folks as well. So that's really cool to hear. And I think it's a big challenge that I think it will expose a lot of bad tax work that's been done in the past for a lot of folks. So more work for folks like me and the people in my community, but also more opportunity for folks that want to get involved as well. So that's awesome. Thank you for that explanation. And I think that it makes the process, I think, more palatable for folks, because people want to be in compliance. And this is a really great safe harbor option for folks to be able to take advantage of, because I don't know anyone who is doing the vast majority of people were on universal basis. And so to be able to make that changeover, I think a lot of folks will start to have, like you're saying, either one wallet or wallets that are built out for different basis usages, like, a
Totally.
long-term wallet or a short-term wallet or things like that. And I think that it'll ultimately hopefully help a little bit with wallet hygiene as well, because
Totally.
simplifying those wallets and consolidating things down and having more like pragmatic approach of how you allocate your assets to different wallets, I think it will hopefully improve security of folks. Just like, you don't carry your gold bars in your wallet walking down the street, you carry the cash that you need to transact, different levels of security for different needs. So I know it's kind of a stretch, but I think that hopefully this compliance action will help improve overall security of folks in the industry. So
I completely
very
agree with
cool.
that. Yeah.
Yeah. So, we're talking a bit about the proactive approach that you guys have taken so far with this new revenue procedure. And crypto regulations are evolving rapidly. I think we saw, we saw the broker regs that came out, I think in June, and then we got kind of some can kicking on whether or not decentralized brokers are going to be wrapped into this, and lack of clarity there. And then also with 2024-28, it's not really clear how the IRS is going to really like prove whether you were in compliance as of 1/1 or not. So to be able to come out with features like this in an environment where you're often like seeing things as clear as mud, right? More power to you guys. So, but how do you guys stay up to date with these changes and ensure that the product consistently aligns with the latest guidance? Do you guys have a team? What's your approach to all this?
Yeah, we take a very strategic approach to this, and we do have a team that works on this. I think we've learned our lesson, basically having done this for 7 years, that when we don't stay up to date with what's going on, the product totally falls behind, right? And we're no longer meeting users' needs. And it's like, what are we even doing then, right? If we're not solving users' problems, what are we doing here? So because we've learned that lesson, we've now spent years really deeply engaged with the regulations on the tax side, with the Treasury, with the IRS, with Congress. I used to go to Washington, D.C. personally every quarter, meet all the folks there, understand what is kind of coming down the pipe. I'm actually going to Washington, D.C. next weekend for the Blockchain Policy Summit. And yeah, it's just like building long-term trusted relationships with the crypto savvy, digital asset savvy folks at the Treasury, with the IRS, keeping up to date on the new regulations, on RFIs, on RFPs, on everything that's happening around crypto regulation as that space is rapidly evolving. So yeah, it's staying close to the regulatory environment, sharing our input. That the IRS, for example, recently had they would take like sort of soliciting comments and input on these like new regulations that you were talking about that came out in June. So we are always researching it, submitting comment letters. Our head of tax strategy was speaking to the IRS on the panel around that. So yeah, it's staying very close to how the regulations are being formed and making sure that whenever there are new updates, that we're proactively improving the product experience to make sure it stays compliant and that users have really simple experiences to do this, because the average layperson is not going to understand what revenue procedure 2024-2028 is or 28 is. They're just going to be like, help me stay compliant, and that's our job.
Yeah, they don't want to have to learn that stuff. It's part, and even if you're a diehard DIYer, like you still don't want to have to read about the Internal Revenue Code, right? So
Totally.
yeah. So do you guys have like a policy for, user education? Because obviously, lots of users won't want to dive too deep into things, but ultimately at the same time, they have a burden to be able to have some sort of level of education on this stuff to be able to file their own taxes. And I would assume that, a good majority of your users are DIYers. So you guys have a policy for educating your users, and what does that look like in the context of this, and what type of services do you guys provide from that standpoint?
Yeah, absolutely. I think you're totally right. And we want people to be informed. It's our job, I think, to kind of like translate the complexity of what some of this stuff is into a palatable form for a general audience. So what we do is we wrote a blog post about this specific case. And if there's other cases too, we have them. I'll send it to you so you can link it in the notes.
Mm-hmm.
And it basically breaks down, hey, what's going on? What's the revenue procedure? Why are they doing it? How are we handling it? What do you need to do? What do you need to be aware of? And so for like the casual user who doesn't care, they can ignore it. They can just kind of follow the in product flow. For the more savvy user, they can read up on it, understand what's going on, why is it going on, what options should they select to optimize the scenario for them. And then ultimately, we're a product company. We're not a services company. We're not offering CPA services or accounting advice or actually filing, true tax returns. So for people who want to work with an actual CPA, we want people to come find actually crypto savvy people like yourself and other people in the crypto CFOs community who are familiar with what are these rules, how do they work, how do they comply. And so we have a whole like tax professionals experience too to connect people with those tax pros and work with them when they have more complicated situations or really want that hands-on tax expertise.
That's great. Yeah, I think that I think a lot of people are worried about how much it's going to cost because they've either been quoted in the past and it's been exorbitant or whatever. But I think a lot of the people that have been involved in the space, even through the bad times, like if they've been here through the bear market, a lot of them are starting to realize that you can't just bill based on transaction volume. It's not going to be accurate and it's not going to be true to what the workload is. And so I think that people that are worried about working with a CPA because they think it's going to be too expensive, it's very expensive to be audited, first of all. And a lot of times, if you're putting incorrect information in, you might not realize it, and you might, cause yourself to report larger gains than you're truly required to. So being able to have access to a CPA, if that's what you want to do, if your situation is complex enough to necessitate that, is really important. So, providing access to that is great. So I wanted to shift gears a little bit and get into kind of future product, releases and things like you mentioned before, the enterprise market. I noticed that you guys recently announced that you were expanding into the enterprise space. I want to say what prompted this move. I think I know part of that answer. Obviously there's a lot of core competencies that you guys developed as a, tax provider in categorizing these transactions that relates to that enterprise side of things as well. But what prompted you guys to make this move and why now?
Good questions. I think that so it kind of so let's just take a step back. Basically, we spent 7 years building this technical foundation. And what that technical foundation does, in a nutshell, is understand crypto activity that people are doing out in the world on chain and exchanges, ingests it, and then classifies it, transfer matches it, applies cost basis, figures out the accounting logic, and converts it from the messy, crazy crypto transaction world into a really neat, reconciled ledger of crypto activity. And then we built a business out of that by converting it into, IRS Form 8949 and connecting it with TurboTax and H&R Block and CPAs. And that was kind of our core business. But the kind of key insight here is that doing crypto accounting and bookkeeping, building a crypto subledger for businesses, the heavy lifting of that, the key problem with that is the crypto reconciliation. It is, in fact, making sense of all that crypto activity. And we've already built an engine that is world class at doing that. So it's a very natural extension of the assets we've spent so much time developing to serve this additional user base. Now, there definitely are new complexities in an enterprise market. You have to build ERP integrations with QuickBooks and Xero and NetSuite and Sage. You have to figure out how journal entries work and translate crypto transactions into journal entries. You have to create rules engines so that people aren't manually tagging their general ledger accounts transaction by transaction, and that it works at scale if someone has 10,000 or 10 million transactions. There's definitely a new set of challenges, but the kind of core secret sauce to what makes a great product in that space is the crypto reconciliation. And the beautiful sort of strategic flywheel that we have there is the more we invest in making it better for enterprise, the more it's better for the millions of consumers. And the more it gets better for the consumers, the more it gets better for enterprise. So we can invest in one common foundation that makes all of our products better. So strategically, it's just very aligned with the roadmap that we have. The reason why we started doing it now is that we're a very resource constrained startup. CoinTracker is a team of 70 people now, but at the end of the day, there's only so many things that we can do in a really world-class way where I can, get up here with a straight face and say, like, Taylor, I think we're the best people in the world at doing this. And we can't do that with 5 or 10 different things. We can do that with just a few things. And so it took us a while to get to the place where I could confidently say, I truly think we have the best crypto tax software. It's the most accurate, it's most scalable, it's the most reliable, it's serving millions of customers, and people, love it. And I feel like we finally got there, this past year. And so now it's like, okay, great. We have this core business. It's working well. There's tons of upside to scale it more, but I feel confident enough that we can now take, bite off a second business pillar. Where should we expand from here? And enterprise was the natural, obvious choice there. And in this latest bull run, I think another key thing we saw from doing a lot of customer discovery and user interviews was that unlike previous crypto bull runs that were primarily retail driven, like retail driving ICOs or NFTs or DeFi, this time a big driver of the bull market was actually institutional adoption. And that came through SEC approval of Bitcoin and Ether ETFs, and Michael Saylor and MicroStrategy getting like way more mainstream attention around building a Bitcoin treasury. And so because there's way more institutional attention this time, whereas in previous market cycles, I don't think enterprises were taking crypto quite as seriously. Now we're seeing that start to change. And that makes it a more interesting business opportunity for us to tackle the subledger market as well.
Yeah. Yeah. I think it makes a lot of sense. I always tell people that, part of the reason why we formulate a lot of courses we have in the crypto CFOs community the way that we do is because the reconciliation work is jurisdictionally agnostic for the most
Totally.
part, right? Like
Right.
if you
Exactly.
know how to reconcile, the units of Bitcoin or Ether or, Matic or whatever in and out of each wallet and make sure that you have like the ending balances match to what, is saying on chain and things like that, then you can apply that information to whatever tax jurisdiction you want to. And so the same is true about accounting for a business. Exactly what you're saying. If you have a really good classification engine, and then you can build out the stuff that's less challenging to overcome, like integrations with different, ledger systems like QuickBooks or whatever. You've done a lot of the Lego things. So it was, I wanted to hear your answer. I kind of knew the answer, I think, to that question because it's, like you say, it's the hard work is already done, or at least you have a really good strategic way to build up both businesses at the same time with constrained resources. So that's cool. Thank you for that. So kind of elaborating on that question a little bit more, there is a lot of competition in the subledger space serving enterprise clients. What unique value proposition do you feel that CoinTracker will bring to businesses managing digital assets?
So before we got into this space, I really wasn't sure about that. So I had a lot of conversations, kind of just like this exploratory conversations with crypto businesses and funds and VC funds and all this stuff to figure out, how are you dealing with your crypto accounting? What products are you using? What pain points are you seeing? To kind of get a sense of, hey, is this a well-served market? Are people kind of generally already happy with what they have, or are there a lot of problems that need to be solved? And consistently, the same thing that I heard over and over again from people was that data quality and accuracy and reliability were major pain points. I talked to so many accountants and controllers that were like, I'm on my 7th subledger right now. I'm pulling my hair out. It's not accurate. It's so annoying. It's the bane of my existence. Like, please solve this problem for me. And so I think the key insight there is that kind of like what you said earlier, garbage in, garbage out. If you can't get all of your data in accurately, if you can't connect all of your integrations in, if you can't get all your chains in, all your custodians in, all your transaction types in, and have that be properly classified accurately, then ultimately you're either going to have wrong data or you're going to have to spend a lot of manual time basically fine tuning and fixing things that don't get automatically classified correctly to begin with, at which point the software or product you're using is not very high leverage compared to just doing it yourself or using a spreadsheet or finding some manual way to handle it. And again, on the consumer side, maybe you can get away with that for some users, especially like the more basic users. But for enterprises, it's like they're running a business. In many cases, they're going through audits or they have to have SEC approved financials if they're a public company. And so, accuracy is paramount. It's not just something you can kind of shove under the rug. It's core to the actual business running properly. And so we've noticed that people just really care about accuracy and quality, and even more so than consumers. And so when I get back to what do we do to differentiate? How is CoinTracker different? That's the thing that we really pride ourselves on is having a really deep bench of depth and breadth of crypto integrations and then reconciling those in an automated way so that the actual work at the end of the day is not weeks or even months of closing your crypto books. We've seen people have 45, 60-day closes for monthly bookkeeping, which is crazy. It should be something that takes under an hour because all the heavy lifting is done. All the rules are in place. Everything is automatically brought in, tagged. You have a really clear automated checklist of here are the 3 things I need to review. And then only if there's new novel activity in a particular period do you really need to go in deep and figure out what's going on. Otherwise, you create the rule, you set it and forget it. It automatically applies to all your activity. You know and trust that it's working because the checks and balances and reports are there, and you're kind of saving the peace of mind and the time and the hassle of trying to do it manually. That's kind of like the magic, I think, of what really solves the problem. It's not some like really fancy AI magic or anything. It's really getting into the quality of the data accuracy and getting that part right.
That's cool. So for speaking to that data accuracy, some companies run their own nodes. Like, where do you guys source your data from to make it special in that way?
So I think the key thing is like the depth and breadth of these crypto integrations. That's like one of the key parts is having like a really good ingestion system. So in terms of breadth, that means supporting lots of different exchanges, custodians, on-chain activity, and we work with a ton of different providers for that, and including redundant providers in case one goes down or one doesn't have certain data. We have multiple providers that we work with for every single one of these things. So that could be, we have backup node providers, we have multiple data sources to cross-check the numbers, we have, yeah, and that goes for pricing of the data, that goes for the integrations, and that also goes for the direct integrations with these custodians and exchanges. And the second thing is the depth of those integrations. So it's not just like, oh, we built an integration with Coinbase. That's the end of it. It's like Coinbase is also evolving. Their APIs are changing. They're deprecating GDAX and they're making it Coinbase Pro. And then Coinbase Pro is getting deprecated and becomes Coinbase Retail Advanced Trading. So it's about building deep relationships with these companies too, like having shared Slack channels, knowing the engineers and the executives, making sure that those people are actually using CoinTracker too, so that when there are changes that we know ahead of time. We're not fixing something because it's broken in production and the user's calling us and complaining and saying, why the hell is this not working? Mm-hmm. It's, hey, we know this API change is coming. We're going to make sure it's a totally seamless transition so that users never have any problems to begin with. So it's the depth of the relationships and the connections and the support that goes into actually making sure these things are going to be future proofed as those integrations evolve over time too. So I think there's like a lot of work that goes into doing that really, really well, and in terms of breadth and in terms of depth of those integrations. And then once you have all the crypto data there, then it's the rest of the reconciliation pipeline, making sure they're categorized correctly, they're tagged correctly, they're priced correctly, they're mapped to general ledger accounts correctly. So really fine tuning and honing that. And again, it comes down to user obsession. Like we ourselves as CoinTracker use our own subledger for our company and our company's crypto activity. So if it doesn't work, our controller is going to come yell at me and say we can't close our books. So we're dog feeding our own product, we're relying on it ourselves, and that forces us to really care about the quality of it.
That's awesome. I was going to ask you kind of to dive deeper into like the pain points that those users that you mentioned were kind of like alluding to, but you answered a lot of that in that last response there. So I wanted to kind of close things out by giving you an opportunity to talk a little bit about, what's coming in the next year, 2 years, 5 years for CoinTracker, and what do you anticipate kind of the roadmap looking like? And evolve. Obviously, it's not going to be the same, now as it's going to be in 5 years. But what do you anticipate happening with product releases in that time frame?
Well, so Taylor, as you know, 5 years is an eternity in the crypto space. So, by then you might be like, mining Bitcoin on Mars. But I think at a high level, like it comes back to our mission. And our mission at CoinTracker is to enable everyone in the world to use crypto with peace of mind. And sort of like peace of mind is kind of the operative phrase there. Like right now, even now, it's come a long way, over the last 15 years, but even now, I wouldn't say I have like a high level of peace of mind using crypto. I have a high level of anxiety using crypto. It's like, oh my God, my private keys, my hardware wallet. Like, what if I lose this? Where's that backup phrase? Like, what happens if I die? How is my new daughter going to get access to this in 20 years? Like, it's still pretty crazy. And certainly taxes and accounting are a key part of that. Like people are freaking out about their taxes all the time. I talk to thousands of people in this situation literally every year. And so the first stab we've taken at this is kind of trying to decrease that anxiety level and increase the peace of mind people have around taxes. And we've made a lot of progress there, but there's certainly a lot more work to do there. I want basically every single crypto user to think that crypto taxes is a completely solved problem, and we'll know that that's the case when it's not a discussion topic. It's not something that anyone talks about because it's a solved problem. So we have a long way to go there, but that like we're going to definitely continue doing that over the next 5 years until it is just a totally seamless problem. And I see signs of hope there. For example, last year I think taxes. I do a lot of crypto activity. I have thousands of transactions a year, and I think crypto was probably one of the easiest parts of my own personal tax return because there are tools like CoinTracker and others that just kind of automate a lot of this in a way that there aren't the same level of sophisticated, technically savvy tools for other parts of tax. They're just not as cutting edge in the tech stream. So I think that we really want to see it as a solved problem. I think number two, we want to extend that technical foundation I was talking about to other segments. And that can include things like businesses. Ultimately, crypto is going to be really successful as a form of money and digital sort of commerce if both the consumer side gains adoption and the business side, right? That's what makes the economy go around. People are spending money at businesses, businesses are spending money, like hiring people for labor. It can't just have one without the other. And I was just talking to the CEO of Bridge, which is a really cool crypto company. And he was sort of estimating that maybe like 5% of the global population has touched crypto in some way right now, which is still so early, but maybe less than a tenth of a percent of businesses have touched crypto. Mm-hmm. So we're still so nascent there. And I think that is going to grow orders of magnitude over the next 5 years, which means that crypto is going to go from this nascent weird thing that people do in the gig economy and like remote work and in San Francisco or whatever, to probably it's going to become a very mainstream form of digital rails. And we're seeing the rise of stable coins and things like that, Bitcoin treasuries. So I think in 5 years, that is going to change tremendously. And it's going to mean that there's going to be a huge need for people to have products and services that enable them to use crypto on a daily basis. The same way there is for traditional finance. Like people have Mint and TurboTax and QuickBooks and all of these products that they use on a daily basis to track their finances and TradFi. All of that is going to need to adapt for the crypto world. And I hope CoinTracker is at the center of that.
Yeah, I think it's the reason for the name of this whole podcast, Niche to Necessity. I think that in the same way that I don't call myself an internet accountant anymore because it's assumed I know how to use email and websites and things like that, I think in 5 to 10 years, people won't call themselves crypto accountants anymore because it's going to be assumed that you know how to transact or at least handle data that comes from on-chain activity. Or It's going to be so simplified and abstracted away that it's not really any specified knowledge is going to be needed at that point anymore. So it's the whole reason for Niche to Necessity to exist, is because I feel like we're witnessing that transition now. And you bring up some amazing points about Bitcoin treasuries. Microsoft just voted on, they voted it down, but they had a vote on whether or not Microsoft should be holding Bitcoin on their balance sheet. Amazon, I don't know if they had the vote yet or they're about to have the vote, but they're going to vote on whether or not they should be holding some Bitcoin. And I think the more and more companies try to, or at least evaluate that decision, I think we're going to see some amazing game theory playing out in the next couple of years as well. If we see any major governments start to buy up a significant holding of Bitcoin as well. And I think that's when things will get really interesting from a price and demand shock perspective. But this is part of why we're here, to watch the ride. So one other thing I wanted to touch on with your response there as well is to your point about this being easier than other parts of taxes. I think it's one of the first times where you can in real time make proactive steps throughout the year to document in software and platforms like you guys offer. People don't have to just check in February, March, April of each year. If you make some complex transactions, log into your CoinTracker or whatever crypto tax software you're using and code those transactions then, so you have it fresh in your mind. if you don't want to do that, sign up for an Etherscan account, and you can put little memos in there as well. But I think that once people educate themselves on how to properly take the steps in this space, it can be easier if you take the right proactive steps throughout the year. So that's a really good point. And then the last thing I want to say on that is, I see on every day on crypto tax subreddit or things like that, people straight up won't sell their crypto because they don't know how to handle it from a tax perspective. So I think that being able to overcome that, so people don't have a fear of selling from being concerned about how to take positions on their reports, I think it's a really key hurdle to overcome as well. And there's still people that feel that way. So the last question I had is, related to users and developers. What advice would you give to crypto users and businesses as they prepare for more complex regulatory environments and just the wave of innovation that's coming in the coming bull run?
I think it comes back to something you said earlier, which is just having good records and being proactive about this stuff is an investment in your future self. It is saving you from a future audit, from a future headache, from a future nightmare where you're going to have to go back and undo the screw up from before and spend 3 times more fixing it going forward. So investing in just keeping track of your activity and having good records is a gift to your future self. So I would encourage people to really take that seriously. Keep good records. That's my number one takeaway for people. And then, like you said, I think there's going to be a tipping point. There's going to be some game theory where crypto adoption doesn't happen slowly 30% year over year like B2B SaaS. It goes flat for 2 years and then it goes vertical the next year. And so be ready for these step function changes. Adoption is not going to happen gradually. It's going to happen really, really slowly and then instantly. So be ready for really dramatic changes.
That's awesome. So yeah, so thank you so much for joining us here today, Chandan. And I'll give you one last opportunity for any closing remarks you'd like to make, or how users can access your tool, or things like that.
Well, no, just thank you so much for having me. Great conversation. Really great getting to know you better, Taylor, and being part of the Crypto CFOs community. I'd say if people are interested in learning more about CoinTracker, you can check us out at cointracker.com, or you can message me on X at CGLODHA at CGLodha. And I'm happy to chat with people. I love talking about crypto taxes and accounting.
I talk people's ear off more than I'm sure they appreciate at times about crypto, and so it's always great to connect with someone that can have a conversation about it as well. So really a pleasure having you on here, and hope to work with you more in the future.
Okay, awesome. Thank you so much.
All right, take care, Chandan.